and today I'm going over a simple and yet new smart money supply and demand strategy. So guys, today the first thing I usually do when I'm trading, guys, is I want to know where the market's going. Okay, so the only way we can make money trading is buying and selling. And buying is when the market's going up, and selling is when the market's going down. You sell for profit, buy for profit. So I'm on NAS 100. And what I'm going to do is I like to start on high time frame. So I'm on the daily time frame right now. And if you notice here, we have market structure. Okay. So we have market structure right here going high. Let me just change that, guys. Hold on. Our current high, secondly here. Current high, previous low, previous high, previous low. And so what this tells me is like, okay, we're in up structure, obviously. Okay, so once I do that, now I'm going to go ahead and go on the 4-hour time frame, and this is actually technically live analysis because I'm actually needing to do this anyway. So I go on the lower time frame, and now, okay, I see that NAS is up, and I'm expecting it to come back down. And why am I expecting it to come back down? Well, because I'm buying. And if you look at the chart right now on my screen, guys, and if you look at the current price range, well, what is the current price range, guys? The current price range is this current high and this current low, okay? That current high, our current low. That's our current price range and trading range that we're trading. We're trading this in this current price range. And if we're buying, we want the price to come back down to a cheaper price before we buy, because we don't want to buy when everything's up because the demand is over here. So we want to wait for the price to come back down and balance at the market at this gap here, because we have a gap. If you noticed, this whole space right here from wick to wick is a gap. And if you look here, and these gaps are our supply and demand zones. And so if we're buying, this would be our demand zone. Okay, guys? So this gap right here, you see how the that gray box, and you see how the gray box is outlined between that candlestick right there, that wick on that candlestick, and then this candlestick wick. The gap is this is the gap, and these are what we trade in my group. We only trade gaps, and we only trade order blocks. Order blocks we'll go over in another video. For this video, we're going to talk about gaps in this. So now that I've identified my gap, what I do is I don't like to leave this giant ass gray box here because it usually makes the chart messy. So what I'm going to do is I'm going to divide that box in half, guys, and I'm going to go ahead and I'm going to go and put this line here, okay? And this line here is going to be called this gray line is going to be my imbalance gap line. So I'm going to remove the gray box right now, and what I'm going to do is I'm going to wait for price to come to this area. And when it comes to this area, depending on your risk to reward, you can either enter on this line, you can enter the trade on this line here, and then your stop loss can be the candle below the candle, or the candle low of the imbalance gap. So this gap right here is this wick. So this candle is the same candle that connects to the wick that created that gap, right? The gap right here. That wick right there. And then the candle body is the area that we're going to have the stop loss in. And so right here is going to be our candle body, and then we're going to make this stop loss line a light color red. Okay, make it a little darker, and then this is going to be our stop loss for NAS if we were trading here. And then I might actually take this trade, and look. So if you guys don't like this stop loss, you can do what we did before. If this is too big for you, which it's pretty fucking big, especially on the 4-hour. What we can do is this. This is why I like multiple time frames. We're going to go to the 30-minute, and we can actually refine, because we can afford to refine this. Because if we go back to the 4-hour, look how big that gap is. So if we go on a smaller time frame, what we're going to be able to do is refine our entry point to a lower area. Because sometimes, yes, price will come and just hit that line, but most of the times, price usually fills it up to 70% of the gap. It doesn't just hit 50%. Most of the times, price will come up to 70%, meaning down here or right here. It may even touch this wick. So what I'm going to do is I'm still going to mark that wick right there with that gray box. And it's skinny because that's the point at which price can come and touch, or a wick can come and touch this wick, okay? Because we're trading smart money. So I could actually refine this entry. I can still leave that line there, or I would do this to avoid confusion. I can bring this line there to 70% of the candle like we said earlier. That way our stop loss is shorter and blah, blah, blah. Or if you want to make it even shorter, go on a 30-minute. And you can make it even shorter there, because if you look on the 30-minute, guys, what do we see? What do you see on the 30-minute? Look at the gap. Look how different it is than the beginning. You see the gap right here? You see that wick right there on that gap that the arrow's pointing to? This is the gap in this box. That's the gap. But we're refining it to down here, so we can make it even lower. Or if we go on the 45-minute, I like that time frame. I know it's a random time frame. We can go even lower. We can make the gap come all the way down here, because that's where the line is. So let me zoom in so you guys can see, because I know you guys probably can't see this. So let's just zoom in here on the gap right there. So the gap is that line of that candlestick, the wick. The candle body is the rectangle. The candle body is the rectangle. The wick are these lines sticking out of all these candlesticks. Those are the wicks, and that wick is the where the gap starts. So the gap starts at the edge of that wick and goes all the way up to that next wick. But the market usually comes, like I said, to 70% of the candle all the way down to the wick, and it taps and goes. Smart money will tap and go. So I'm going to remove this, and we're going to refine. I'll leave that other gray line there. We're going to refine our entry even lower, so we can have an even lower stop loss. And so this is what you do to get trades. You can this is good. This is a way I usually do risk management in my group, and how I usually trade, and how I usually do risk management. And so my entry can be right there. I would make this my entry. And the fun part is, guess what we get to fucking do? I'm going to show you some cool shit. So right now, people are buying NAS 100 because NAS is up, right? So if we go in the pre-markets and we look at NAS, this is how I trade NAS too. NASDAQ is green. Everything's all green. So people are buying NAS, right? So people are buying NAS. So because people are buying NAS right now, guess what's happening? They're buying right here because they see this demand right here, because we trade supply and demand in the group. Ignore the purple line. Just look at where my arrows are pointing to. They see this white demand here, in the white candlestick. They see that demand, and people that don't know how to trade or just stock market people, or just people are just buying NAS. They're just buying it at the top. They're not even buying it right there where the arrows point to. They're buying it actually right there. And so what's going to happen is smart money is actually going to wait and accumulate orders from all these retailers that are buying, and then what's going to happen is price is going to come down and drop like that purple line all the way down to my entry point. And maybe not even my entry point, but price is definitely going to drop. And if not drops down here, guys, in this zone at all, it will come back and fill that imbalance. That's why these gaps are called imbalance gaps. The market is balanced. When there's volatility, such as the news, the news creates these gaps that you see with these giant candlesticks, and then that creates imbalance in the market. So the market has to return to those areas to balance itself out. And so we profit from the market returning to those areas, or either we start and trade, and those are the result of our trades. So right now, I'm going to either looking to buy NAS, or potentially be waiting for it to come back down into this lower part of the range. And the reason is because if we go to the higher time frame again, I'm bullish on NAS. We have bullish market structure. So within our current, and if we look at our current price range, what is our current price range again? Our current high and low, which is our structure. Our current high right there and our current low. And if you look at your current high and current low on the screen, our current high and current low, price is not at the lower part of the range. And if we're buying, we need price to be at what? So let's take a tool here on TradingView called the Gambox tool, and let's divide this trading range in our market structure in half. And you see that green line I'm drawing? Let's divide it in half, okay? So the market needs to come down below this green line here in the middle green line in between, because you see 3 green lines on this tool. The middle green line is where the market needs to come down and return to before I buy NAS 100. And the reason is because the below this green line is what we consider a discount area, because in their current price range, we want to buy the dip and we want to buy low, not high. And the price is still currently high, even though on a small time frame, it may look like it's low when it comes down to that current current demand. That's why market structure is important. And the first tip I have for you guys is to learn your market structure and find time frames for your market structure and get that down first before you even look for trade setups. So that's all I trade. I trade order blocks and I trade imbalance. So yeah, guys, this is just a quick video. I hope you guys found value out of this. Peace. I'll make another video later. And if you have any questions, my Instagram is in the comments, or you can just message me on anything you see. It's all in the comments. It's all on my pages, everything. And step number 1, identify your market structure. And another tip I have for you is when trading NAS 100 and supply and demand is just identify your market structure, and also U.S. news. Be aware of U.S. news, because NAS will move whenever there is orange and red folders on the economic calendar, meaning high volatile and medium volatile news. And like I said before, volatility creates market movement. And even though these gaps that I told you guys about earlier are in balance, we need these gaps in this amount of movement, because the market only moves when this occurs. If we had to wait for the market to be small, for the market to move like it's normally moving with these small candles like you see here, then it would take forever for the market to move at all. So that's the whole point of us trading smart money and making money. So yeah, guys, basically this is how I trade NAS, and this is basically how supply and this is sorry, I'm just stuttering. This is a supply and demand video tutorial for beginner Forex traders that are looking to convert to smart money concepts. And if you guys have any questions, message me on Instagram. I have a Discord, guys. It's not $1,000. It's not $200. It's not even $100. It's only $49.99 a month. If you're interested in that, let me know. If not, it's cool. I have plenty of videos. I have ebooks. I have resources. But the inside my group, that's where I have my full strategy, and I have a community, and all my other digital resources are there with instant access to me as well. And yeah, guys, I think it's good to be a part of a community that can help you, and you can also look at my daily trade setups, because I have a channel where I show all my daily trade setups, and you can copy my not copy my trades, but you can copy my you can look at my setups, my pictures of my setups, and you can compare my setups to your setups in order to trade more and more like us and like me. So yeah, guys, if you're interested in that, and then the secret to become profitable in the Forex market when you're trading indices is the ability to consistently find setups. And the reason I say that is because setups equal money. If you want to make money from trading, you need to trade setups, the correct setups, and you need to focus on the charts, because the money and the lifestyle will follow after that. And that's all I have to say, guys. Peace.